Hi, welcome on this new video by volatility.com, and today we are going to look at iVol Live and we are going to discuss the recently released single contract viewer, which is a service that is there to help you sort of identify the recent trends in a specific contract that you want to trade, or at least that you have interest in. So I think there are multiple use cases and we will go through some of them. In general, the iVol Live platform offers a lot of features and information. If you haven't seen the other videos we've produced recently, please take a look at the YouTube channel. I also invite you to take a look at our news page, where you will find a lot of information about the type of services that we offer and examples of how to use those services. The most recent addition we've had is the chart service, which is available for advanced and pro subscribers, and that offers you a lot of possibilities, from spot to implied vol to single contract analyzer, implied vol index, as well as open interest in volume, skew, term structure. You've got plenty of information, especially very advanced things like IV difference, which allows you to take any 2 points on any curve and compare them very quickly. So if you want to look at the cost of a 90% put in vol terms for the Nasdaq compared to the SPX, takes you a few seconds to implement, and you can get a lot of historical information. And you have IV premium chart as well, which allows you to sort of quantify the richness or the cheapness of implied volatility. Again, please have a look at the videos that we've produced recently on the YouTube channel for more information. But today I really want to talk about the single contract viewer. Now, it's going to be available in two places, in charts and in sort of like the underlying page. So if we go, for example, on JP Morgan, and I have the JP Morgan tab already open there. For those who are familiar with the product, you will see that we've added this little icon here next to the skew chart icon. So if on JP Morgan we look at the December options, right, we have all the available strikes and we have a lot of sort of fields that I've selected. So if you want to change the fields, you can go on to settings up there, top right, and then you can add whatever you fancy. And so here we are looking at the money strike, which is the 124 strike. And we can click on this little icon here, price and IV history chart, and that will open up this page. So we can see that we have bid, we have ask, last price, IV, and then table, right? So we can see how the bid has evolved for yesterday's session. We can see how the ask has evolved for the session as well. We can see how the last price has evolved. So obviously the last price will only be updated when there is a new trade. The IV is obviously based on the mid, so it gives you an idea. You can see that this particular strike has remained very sticky across the entire session, with an IV that has trended around 31.40, 31.50 for pretty much the entirety of the session. And then we have the table, which shows bid, ask, last, IV, and volume. Now, the table is going to be very interesting because it will help you, not in particular, help you find the direction of the volume that you see. So for example, if we look at these 4 contracts, so this is cumulative volume. So here we had 0 volume. Now we have 4 contracts. So it means that at 9:37, between 9:36 and 9:37, somebody traded 4 contracts. Okay, and we can see that those 4 contracts were traded at 425. Now, if we look at the prevailing prices just around this trade, 410, 430, 415, 430. So we assume, we would postulate here that that was a buying flow. Now, can we know for sure? Not at all. There is no way for us to know for sure whether this was a buyer or a seller. The only way for us to know would be to know that person, or to be that person, or to be the market maker who traded against that person. But we can assume here that this may well have been a buying flow. If we look at these 4 extra contracts, so we go from 4 contracts traded on the day to 8 contracts, we get 4 extra contracts that traded. We see that these 4 extra contracts traded at 410. Now this is a bit more complex, but if we see, we were 410 at 425 just before and 385 at 415 right after. So it is quite possible that this was a selling order, right? Somebody came in and sold 4 contracts, possibly the same person who bought 425, then came in and sold 410. That's an hypothesis that we can make. Now, we don't know for sure, but we can sort of make this hypothesis. And so we can slowly rebuild the day, and especially when we will see big, large contracts trading, that will help us sort of like make sense of what we see. So here we've got an extra 3 contracts that traded at 405. The market was 39 at 410. It then moves to 415, 435. Again, a fair assumption would be that this was a buying order, so we had someone buying 3 contracts. So if we, for example, look at C T minus 1 volume here on the 125, we see that we have 1,765 contracts that traded. So we can click here, go to table, and then start looking for those volumes. So, we get 32 contracts that trade at 350 right off the open, probably a buyer, considering the bid ask was 320, 365. But we are going to be looking for the I prints, for the volume that was, elevated jump. So for example, here we see that, we go from 255 to 500 contracts. So we double the volume. We have someone trading. Someone is a general term, doesn't mean it's one individual, but in collectively there is 250 contracts that traded between 11:17 and 11:12. So over these 5 minutes, someone traded, or at least the market collectively traded 250 contracts. Now we look here, we can see that the market is 3.9 at 4, 3.85 at 4. It trades 3.98 for 2 contracts. Then we have another 14 contracts that trade at 4.05. The market is 3.9 at 4. So we can assume that these were buying contracts. These were buyers. Here we have a large buyer of 116 contracts that come in to buy. Well, if we look here, this price was traded at 4. The market was 395 at 4.1, moves to 395 to 405. Possibly this was a seller, so somebody came in to sell all of these 116 something contracts at 4, etc., etc. Here we have a 503 minus 388, so that's going to be 115 contracts that trade at 4. The market was 395 at 405. It moves to 39 at 405. We could potentially assume that this was a seller. Again, no guarantee, but we can make assumptions. And so if we are very interested in, for example, let's imagine that we are a buyer, a genuine buyer of the 125 calls in November on JP Morgan. Well, by looking at this, we can sort of see that there seems to be some selling pressure in this particular contract. No, that's the assumption that we make, but if we look here, we've got about 350 contracts that trade at 395. Market is 3.9 at 4, and then it was 3.9 at 4 before, so it kind of trades in the middle. So this is a sort of an even market. It's difficult for us to draw any conclusion. If we continue to scroll down for further prints, here we've got about 90 odd contracts that traded at 365. Again, trades in the middle, so not much that we can say. So by sort of like analyzing those specific trades and specific contracts, we might be able to at least get an opinion on whether this contract is bought or is sold throughout the session, right? And so by sort of like looking at it before executing, it might give us an idea. If we find that we want to buy and there seems to be a lot of buyers at the same time as we come in to buy, well, it might have an influence on how we want to execute the trade. On the other hand, if we find that we want to buy in the seller's market, we might want to be adopting a different strategy. So this is very powerful. And again, if we want to buy, for instance, those 135 strike, we can click on the IV and we can see how the IV has evolved. So, over the last session, well, we could easily see that, if we, for example, came in around lunchtime, we could have seen that the IV had dropped below 28, but it had, it rose above 29, sort of right off the open. So we had a decent cheapening of the option premium for the first, few hours of the day. So this is some very useful sort of like pre-trade information, or at least it's almost at the point of trade information that can help you sort of make a decision on how to execute. Do you want to be aggressive? Do you want to be executed rapidly because you're facing a lot of buying competition? Are you seeing implied volatility come off? And are you seeing, are you buying into a vol dropping market where you can maybe be a bit more patient, etc., etc., etc. So all of these things, are going to be very useful. You could also find those charts. So for example, if you wanted to compare a few of these single contracts, you could also come in here and type in the sort of asset that you have, and you could say, I want to have a look at, for instance, the December, and I want to pick the strike, which is going to be, let's say, the 160. I want to see the IV, and we sort of hesitate between, let's say, the 160 and the 165 strike, and so we want to see how both have evolved over the day. And here we're going to pick the 165 and we're going to take the IV. And again, this is going to show us the IV for that specific strike. Now, obviously, those strikes are very, very close. They're $5 away and they generally behave in the same way. So it's interesting. But, we can see that, for instance, right off the open, this strike peaks at 938. This one peaks at 943. there is a second peak at 9:43 there. So that's sort of like that strike started moving earlier, and then we drifted down to sort of 26:41. So it allows you to quickly as well, have a look at how things are evolving for a specific contract that you might be interested in trading, and to locate whether over the session, the current session, this contract is bought or is sold. So very powerful tool. We are going to expand that tool, to add more history, to add more features. And as usual, if you think of something that, would be very useful for you, do not hesitate to write to us. Do not hesitate to send us some, email to support@ivolatility.com, and we will be more than happy to, take this into consideration. The single contract viewer was created to address some of the specific needs that clients have expressed. As usual, if you have any questions about the products, if you want to get a one-on-one demo, you can subscribe to a free trial on the platform by simply clicking on subscribe to Ivo Live, and that will take you to our platform information where you can sign up to get a free trial. So feel free to have a look at these. Do not hesitate to write to us, and I'll see you next time for another video. Thank you.